I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, this week we've got over 1,400 earnings reports. Yep. We've got the Fed, we've got trade, and I'm moving. Just kidding, that's not something you should care about. But there's a lot on investors' plates right now.
One of the things that I was talking to someone on the floor earlier, and he was looking at my bag of research. And he said, well, that's ridiculous, Jim. I said, well, what's ridiculous is how many companies have come public that we have to follow. I mean, just think about all the work you need to do for Beyond Meat. A huge amount of work. Just think about what you had to do this week for Twitter, what you do for CrowdStrike, what you have to do for Exact Sciences. That's not a new company, but Exact Sciences buying a genome company. Here's what happens. You end up doing equal amount of work for small and big, all right? We have drug companies this week. Are you going to be able to spend enough time on Pfizer, they basically pre-announced, and Merck, and then also do Eli Lilly? Are you really able to do all those layered on Senator Warren attacking business, layered on the president attacking Powell, layered on Powell having to pull off what Yellen talked about? So something gets short shrift, and the answer is the earnings get short shrift. And my job is not to let that happen. So yes, when I'm in the pool over the weekend, I am reading McDonald's conference call. I have to, because these are what's really driving the earnings season is the actual earnings. If you take a look, ServiceNow. I had John Donahoe on last week. I didn't think the quarter's bad, but look at what's happening with those stocks. They're all rolling over. Why? Because you had to be on ServiceNow's quarter. Hey, it's extraordinary how the pin action is extraordinary right now. There are just companies going down, literally, because other companies are going down, and so that's where the opportunity comes in for our viewers.
You and I, we're watching the markets all day, every day. We're watching them at night.
But during Friday,
and on Sunday, and on Saturday.
Friday off. I was supposed to have the Fridays off. This is the first Friday that I've had off. And, I mean, wow. Of course, it was a big earnings day. But every day is a big earnings day for
every day.
Every day, since the first week of July. And I canceled 2 of my vacation days. I took my vacation day on Friday. I'm not going to have anywhere near the number of weeks that I'm supposed to take in my contract. So, what in my CNBC contract? So what happens is we have no choice. We have to work on our vacation days.
But for investors who investing is just a side part of making their money, right. What should they be looking at this week when they've got all these headlines?
They should be happy with the S&P. They should be very happy with the S&P 500 because the S&P 500 is doing more with less. The buybacks rarely talked about, really taking a lot of stock out. The revenues are okay, better than thought. Remember, my whole takeaway for this earnings period is BTF, better than feared. And BTF is really playing a big role for you at home. And BTF makes me say, let's say you had money and you wanted to put it in your 401k, let's get through the week. And if the week is stable, you'll now have so many earnings that we'll know to commit. So if you haven't committed yet, wait a week.
All right, so Jim, this morning you wrote an excellent Real Money column, which if you guys haven't read it yet, you really need to. So you broke down Starbucks, you broke down what you liked about Starbucks and what you liked about their CEO, Kevin Johnson.
Yeah,
now,
thank you.
Based on that, what's it going to take for you to invest in Starbucks?
Well, I blew Starbucks. The Children's Trust blew it. We were focused on others. I liked McDonald's. I liked Starbucks. What I didn't count on, as I say in the piece, was everything gelling at once. The digital turned out to be much stronger than I thought. I should have realized Kevin Johnson's from Juniper, a tech company. Delivery turned out to be much better than I thought. The convenience, growth at scale, which is quite different from opening up reserves. Remember, he wasn't focused on reserves, so he's distinguished himself from Howard, who I know is very happy because Howard is thrilled with what Kevin's doing, which is fantastic. And I think that Kevin uniquely surfaced at the right time. It was a throughput issue. Now, Brian Niccol, Kate Rogers did a great piece for CNBC, but Brian Niccol is worried about throughput, and he's done that at Chipotle. That's why that stock's been roaring. Goldman recommends it again. And McDonald's worried about throughput, and they've solved it too. One of the things I really emphasize is that they're wiping out all the... this is like how Walmart... This is a good theme for me. How Walmart, Costco wiped out a lot of retailers. We're going to see a lot of restaurants wiped out by McDonald's, by Chipotle, and by Starbucks. Meaning that the millennials like to snack, they like to eat all the time. And
sure.
They're going to, I know that you think that they don't like burgers. Let's see what they do with Beyond Meat.
Yeah, I'm excited to see that after the bell. I'll be covering it on Twitter.
Yeah, I have to tell you, Ethan Brown, I said it on air. Ethan Brown is the Elon Musk of food.
I love that.
And food, I don't know if there's many things more important to a millennial than food. They're so focused. I mean, all their bodies are temples. I mean, my body was a punching bag. There's my body temple. Mine's a desecration.
Maybe all the non-journalist millennials are they're treating their bodies like temples, but I can't afford that.
I ate way too much this weekend. I went to Sonny's and got this wheel of sausage. Oh my God, not a lot of fish. A wheel, yeah. You put it on the grill, and my wife's making it impossible for me to lose weight this summer.
All right, so Jim, based on your article, I think that there's an investing education angle here.
Sure.
And that is, speaking of Kevin Johnson as being a tech company, when a company hires a CEO it's a non-tech company and the CEO is from a tech background, what is that signaling? What should investors be watching?
Well, I think that the great Mark Benioff, who has a new book coming out, Trailblazer, with Monica Langley, October 18. The great Mark Benioff from Salesforce has told me over and over again that this is an industrial revolution, a digitized industrial revolution. So I think that those who don't bring in a new technologist are in peril. Look, even Ginny Rometty brings in Jim Whitehurst, totally different culture, totally different. I mean, so even tech has to be disrupted by tech. But I think that when you look at what the winners are, take a look at Domino's. Okay, so Domino's has always been tech oriented, but there was a Deutsche Bank piece today that started with a sell. Why? Well, because other companies have caught up to the technology that Domino's uses, and they're using these third-party DoorDashes. DoorDash 300,000 restaurants. It's hard to find a restaurant that they don't do. And we use Caviar at Bar San Miguel and Caviar at Longshoreman. And my wife is co-owner of Longshoreman. I think if we had our druthers, we would love everybody to come in because, we want you to have a bottle of wine and have dinner. But the millennials, no. They got to sit on the couch, watch Netflix, play video games, and eat.
I mean, that's something that when I talked to Crunch's CEO, that's something that he pointed out. But I do want to move on to our last topic.
I mean, I don't despise millennials because they're our customers, but they really should come in and have something to drink.
All right, millennials, it sounds like we got to head down to the Longshoreman or Bar San Miguel.
Come to Bar San Miguel, man, because we're making these great cocktails.
I still haven't been, so I need to head
extraordinary down. Cocktails, designer cocktails. A lot of them with mezcal. I love mezcal. And I am just, the millennials have to get off their butts. I do have a great bag that my late dad designed, so when you do order, you get a bag that you can then walk around town with. It's a very heavy paper bag, not plastic. We are really against single-use plastic. Make that very clear. As you witnessed, that we sold Dow. We sold Dow today. Single-use plastic is not a big part of the pastiche of Dow, but it's an ethos. Single-use plastic, plastic straws. No, the millennials, they won't tolerate it, so we won't.
All right, and we're going to talk more about your Dow in Action Alerts Plus. But our final topic today is about the real money stock of the day, which is Mylan. Now, Mylan and Pfizer announced...
Heather did something really smart. She affiliated with Pfizer. A lot of people feel that Heather's been an outlier. They don't like what Mylan's done. There's some manufacturing issues. There's a race to the bottom. There was that EpiPen. And I think that Heather works very, very hard, but that Mylan... Look at Teva, okay? I mean... look at Allergan sold out. I mean, they had sold their generic to Teva, but just saying that the consolidation here is fast and furious, and Heather has done some consolidation, and she needed to do that. The off-patent drug business is not a great business, but Heather knows how to make them. They've got, I shouldn't say that, they've had some problems making things, but if they get their manufacturing issues really, and I know Pfizer has good manufacturing, they get things smooth, then I don't want to recommend it, but I wouldn't sell it anymore. I'm more inclined to buy Pfizer. Pfizer offloads these low margin drugs, and Pfizer's down. That's wrong.
Well, throughout the Trump presidency, drug pricing has been a huge hot topic, and it's just about to heat up.
It's really cancer, though. It's anti-cancer drugs. That's where the big inflation has been. So let's watch Merck, because Merck has very, very good cancer drug in Keytruda. But if you look at the markup at hospitals, the big markup is in cancer drugs. And if the president or if Elizabeth Warren were to drill down You have to go a little. This is, again, the issue that I find over and over again. If you do the homework, you'd realize that the cancer drugs are where the problem is in the system. They've got to cap how much a hospital can charge. They are charging far more than they should for oncology. And everybody knows it, and it's ridiculous. That's where they should focus.
So investors should take a look at Pfizer and they should take a look at Merck?
I like Merck because I don't believe that the politicians are focused, and Keytruda is a wonderful drug. But I have to tell you that the cancer markup is insane.
All right, Jim, so that's all the time that we have for today. Thank you for joining us. All right, guys, if you're watching on TheStreet's Facebook page or on TheStreet.com, we are now heading over to our Action Alerts Plus Daily Rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.